Guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 174, recorded here on July 13th, 2025. This podcast is for entertainment only and is not investing advice, so please do your own homework. We are at block 905406. Moscow time is 8:42. Fees are 1, 1, and 1. Got a lot to cover this week, so let's jump right in with the market news. Wall Street on Friday ended the week slightly lower as sentiment was dented by trade war escalation. Still, U.S. stocks are at record levels, and the benchmark S&P 500 index this week posted a new intraday high of 6,290.22 points. U.S. President Donald Trump's tariff moves dominated headlines. The president issued letters to several countries outlining tariff rates against them, including major trading partners such as Japan, South Korea, Canada, Brazil, and the Philippines. He also targeted copper imports with a 50% tariff and said pharmaceuticals could be charged a levy of as much as 200%. This week saw a major milestone for chipmaker NVIDIA. The Jensen Huang led firm became the first publicly listed company to hit 4 trillion in market capitalization. The spotlight will shift from tariffs to the earnings season next week, though investors did receive a quarterly report from a major firm this week in the form of Delta Airlines. The number one U.S. carrier delivered bullish results and upbeat guidance. For the week, the S&P shed 0.3%, the blue chip Dow fell 1%, and the tech-heavy Nasdaq Composite slipped 0.1%. Looking ahead, Wall Street will have plenty to look forward to this week. The focus will shift somewhat from U.S. President Donald Trump's tariff moves to second quarter earnings season, which will kick off with reports from major banks and other household names. Still, trade developments will continue to garner a chunk of the spotlight, especially after Trump targeted the European Union and Mexico with tariffs over the weekend. Companies that will report quarterly results include the two biggest U.S. banks by assets, J.P. Morgan and Bank of America, along with pharmaceutical giant Johnson & Johnson and streaming pioneer Netflix. The economic calendar next week is fairly busy. Inflation will be in focus in the form of the June Consumer and Producer Price Index reports. The retail sales reading for the same month will also arrive. All right, jumping into the Bitcoin news this week, we will start with the Hodler's Digest from Cointelegraph for the week July 6th through 12th. Let's see what's new. Attorneys for digital asset manager Grayscale pushed back against the United States Securities and Exchange Commission's delay on approving its digital large cap exchange traded fund ETF in a letter sent on Tuesday. The SEC's Division of Trading and Markets initially approved the ETF proposal, but the SEC's Office of the Secretary decided to review the action immediately afterward, halting the decision, Grayscale's attorney said. This violates the statutory approval or disapproval deadline set by the SEC and conflicts with established procedure, according to the attorneys. Cryptocurrency exchange Binance reportedly helped create the code behind the stablecoin issued by World Liberty Financial, one of the crypto businesses tied to U.S. President Donald Trump. According to a Friday Bloomberg report citing three people familiar with the matter, Binance helped create, promote, and played a role in the largest transaction of WLF's USD1 stablecoin. The crypto business, backed by Trump and his three sons, launched USD1 on March 4th. An Abu Dhabi-based investment firm, MGX, announced a $2 billion investment in Binance on March 12th using a then unnamed stablecoin. Eric Trump, one of WLF's co-founders, said in May that the company would be using USD1 to settle the investment. Changpeng Zhao called the Bloomberg article a hit piece and later shared a tweet claiming that Coinbase was behind the accusation. Oh, a little FUD here. Longtime Bitcoin critic and gold advocate Peter Schiff said the latest Bitcoin rally may be a selling opportunity for investors to buy silver instead. With Bitcoin hitting new highs today in dollars, it's a great time to sell some and buy silver ahead of silver's next big leg up, Schiff said in a Thursday X post as Bitcoin put on its moon boots again and set new highs above $112,000. He claimed that silver has more upside potential than Bitcoin and added that while Bitcoin can easily crash, silver's downside seems very limited. Arthur Hayes, co founder and former CEO of BitMEX, also weighed in on market conditions in a Friday X post. He said he was slightly bearish due to the U.S. Treasury general account being replenished through new debt issuance, which could temporarily drain liquidity. James Wynn, a crypto trader known for his high leverage crypto bets, appears to have deactivated his X social media account following 9-digit losses. Wynn's X handle, James Wynn Real, now routes to a page that says, "This account doesn't exist. Try searching for another." The trader's wallets show a combined balance of just $10,176, according to balances displayed by Arkham Intelligence and Hyperscan. Cointelegraph reached out to Wynn for comment, but was unable to get in touch with the trader. Before deleting the X account, Wynn changed his profile bio to one word: broke. American rapper Snoop Dogg sold out a collection of almost a million non-fungible tokens, also known as NFTs, on Telegram in 30 minutes on Wednesday, seemingly defying the notion that the NFT industry is dead. Snoop Dogg's new digital gift collection of around 996,000 non-fungible tokens powered by the TON blockchain is inspired by Snoop's iconic style and generated $12 million in sales, Telegram founder Pavel Durov said in an X post on Wednesday. Blockchain minting and the secondary market will go live in 21 days. It's going to be wild, he added. The tokens in the collection include representations of vintage cars, swag bags, a digital dog, marijuana related topics, and a mix of other items and symbols. The shitcoining just doesn't stop. Bitcoin has rallied by 10% in July, reaching new highs at 118,600, and this could be just the beginning of a parabolic rally, according to anonymous Bitcoin analyst APSK32. The analyst said that Bitcoin could be worth as much as $258,000 if history repeats itself. According to APSK32, Bitcoin's price action has followed a long-time power curve trend line, a mathematical model reflecting Bitcoin's exponential growth over time. It measures price deviation from this trend line not just in dollar terms, but in units of time, an approach known as power law time contours. A Chinese creditor has filed an objection to a motion from the FTX estate that would pause payouts to residents in jurisdictions with laws or regulations restricting cryptocurrency transactions, according to a Tuesday court filing. The creditor, Weiwei Ji, stated that although they reside in Singapore, they have been classified as a Chinese creditor due to holding a Chinese passport. Ji noted that the objection was submitted on behalf of Ji and a growing group of Chinese creditors, reportedly over 300 individuals, according to the filing. The objection raises two key arguments. First, that FTX settlements are made in US dollars, which are a standard legal repayment method. Second, it notes that cryptocurrency distributions are legal in China, with digital assets constituting personal property. Anatoly Legkodimov, a Russian national and former CEO of cryptocurrency exchange BitSlado, reportedly requested a federal pardon from U.S. President Donald Trump after a 2023 guilty plea and serving 18 months in prison. According to a Friday report from the Russian state media outlet TASS, Leg Kadimov's legal team officially asked Trump for a presidential pardon after he pleaded guilty to operating an unlicensed money transmitting business. Leg Kadimov was indicted in January 2023, pleaded guilty in December, and was sentenced to time served in July 2024 after being in custody for about 18 months. Anatoly became a target in a political campaign against the crypto market and talented Russian programmers, said Ivan Melnikov, vice president of the Russian branch of the International Committee for Human Rights, according to TASS. The French Public Prosecutor's Office has opened an investigation into X over the alleged use of its algorithm for foreign interference, according to a statement from Magistrate Laure Becchiao on Friday. Prosecutors have launched a probe into whether X violated French law by manipulating its algorithms to extract user data fraudulently. The investigation was launched after two reports were submitted to the Paris Public Prosecutor's Office's Cybercrime Division on January 12th, one by Member of Parliament Éric Bothorel, a member of French President Emmanuel Macron's Ensemble pour la République party, and another by a senior government official whose identity was not disclosed. And that pretty much wraps up the Hodler's Digest. Moving on to crypto news. This was updated on July 11th. Bitcoin surpasses silver, becomes sixth largest asset in the world. According to companies' market cap, Bitcoin is now sitting in the sixth place among the world's largest companies, metals, and digital assets with a market cap of $2.34 trillion. Silver follows at spot number 7 with 2.163 trillion in market capitalization. Tech giants Google and Meta are behind BTC and silver with 1.15 trillion and 1.79 trillion respectively. Notably, Bitcoin is currently close to entering the top 5 assets. It has a chance to overtake Amazon as well. The massive company has a market cap of 2.37 trillion, about 3 trillion more. 3 trillion. No, that's not right. Uh, like 300 million or something like that, or 3 billion. Analysts have noted Bitcoin's maturation and stability, especially for a volatile asset during the ongoing turbulent period. Specifically, it saw significant institutional interest and was consolidating above 100,000 for days before surging to its new all-time high, all the while defying major macroeconomic uncertainty and global geopolitical tensions. Per Peter Kozakov, co-founder and CEO at Mercurio, BTC surged past 118,000 amid sustained institutional demand for the biggest cryptocurrency, which has been such a driving force in this current market cycle. He continues, while altcoins are also in the green, with Ethereum spiking past the $3,000 mark, the underlying orange pill narrative remains steadfastly in place. Bitcoin's growing status as a store of value is one that more and more big players and institutions are simply unable to ignore. Crypto market has seen a significant surge. The market cap is up 2.8% in the last 24 hours to 3.76 trillion. At the time of writing, Bitcoin trades at 117,884. The coin hit a new all-time high of 118,667 earlier today. The current price is also a surge from the intraday low of 110,984. Also, it is up 9.1% in a week, 7.5% in a month, and 101% in a year. Moreover, analysts and investors are waiting to see if Bitcoin will surpass the 119 and $120,000 levels, which could propel it towards 130,000. Bitpanda's deputy CEO Lucas Enzersdorfer Conrad argues that we're well on track to break through the 120 barrier Macroeconomic factors, record high ETF inflows, and renewed confidence in digital assets drive the rally. The crypto market tends to move in cycles, evolving segment by segment and wave by wave. It's very possible that we're only at the beginning of a new phase in this market, Enzerdorfer Conrad says. Moreover, Nikolai Sondergaard, research analyst at Nansen, argued that this isn't a macro-driven rally, but an isolated event. However, recent U.S. policy developments, such as fiscal expansion and expectations of further monetary easing, have created a backdrop that is undeniably favorable for Bitcoin. Also, he adds, we're seeing growing institutional confidence in Bitcoin as a balance sheet asset and strong sustained inflows into Bitcoin and Ethereum spot ETFs. Additionally, Zonda Crypto's CEO Primislav Kral commented that Bitcoin's latest ATH further cements its growing role in the global financial system, now being more in demand than ever. Factors increasing demand for Bitcoin include clearer and more favorable regulations, increased utility such as payments, and changing economic conditions, Kral says. Regulations such as the EU's MiCA contributed significantly, he adds. But Kral warns, with such hype comes the need for caution. No one knows whether the price will go up or down. James Harris, the newly appointed group CEO of Tesseract, also notes that while it was great to see Bitcoin decisively shatter its all-time highs in USD terms, they fall short versus Euro, GBP, or gold. That said, the continued momentum has Bitcoin edging closer to those benchmarks as well, Harris said. Next up is from Crypto Potato. This was posted or updated, I guess, today. 6 reasons behind Bitcoin's surge to uncharted territory. Can they push Bitcoin even higher? I don't know. Let's see. Bitcoin's price revival at the end of the business week caught many short traders off guard as the asset skyrocketed to a new all-time high of almost $119,000 following an extended period of muted movements. Although there was not one single big announcement that could have been related to the explosive rally, there are several reasons that were building up for weeks, which could be attributed to the new peak. The following reasons will be combined into one category of overall accumulation, even though they may vary by investor type, different moments of purchases, etc. We will start with the ETFs as they are the freshest. As reported yesterday, the spot Bitcoin ETFs in the US attracted more than $2.7 billion within the past 5 trading days alone. In addition, they have seen only 1 day in net outflows since June 9th. Both of these factors can drive the underlying asset's price north, especially when investors spend more than $2 billion to accumulate ETF shares in 2 consecutive days, July 10th and 11th. Next, we will list the accumulation by large companies. Strategy, which admittedly failed to announce a purchase last week, has spent billions in the past few months to acquire more Bitcoin. Its example has been followed, but to a smaller extent, by other companies that now hold Bitcoin as a reserve asset, such as Metaplanet, GameStop, and Semler Scientific. Although these purchases might not impact the asset's price immediately, their continuous efforts certainly play a role as they reduce the immediate selling pressure. The accumulation trend expands well beyond institutions and large companies. Glassnode reported recently that smaller investors, categorized as shrimps, crabs, and fish, wallets holding less than 100 Bitcoin, have been acquiring more than 19,000 Bitcoin per month. In comparison, minor issuance stands at just 13,400 Bitcoin per month. The aforementioned purchases from various types of investors, most of whom are transferring their Bitcoin holdings out of exchanges, lead us to the next reason. Yes, they are related. According to CryptoQuant, the amount of Bitcoin stored on trading platforms has declined to the lowest level in a decade, another signal that investors are looking for the long term. The reasons above paint a clear picture that investors are accumulating. Now let's get down to why they might be doing so. Although Trump bombarded numerous nations and entire unions with new sets of tariffs in the past few weeks, including on Saturday, the effect is nowhere near as devastating to Bitcoin as it was back in April. At the time, Bitcoin's price collapsed to a 5-month low, while now the tariffs are somehow considered beneficial for the cryptocurrency. As analysts from QCP put it, will Trump delay implementation once again? That remains to be seen, but repeated cycles of tariff threats and postponements have contributed to positive uncertainty. Business sentiment and manufacturing indices have remained firmly in expansion territory. In the meantime, we will conclude our reasoning with the declining US dollar index. Experts have long predicted a massive parabolic move for Bitcoin once the greenback loses traction. This is because investors tend to jump into store value assets such as gold and Bitcoin in times when the dollar is weak. Nikolai Sondergaard, research analyst at Nansen, told Crypto Potato that although he didn't believe this rally was mostly driven by macro events, he thinks certain U.S. policies have attributed to it. Recent U.S. policy developments, such as fiscal expansion and expectations of further monetary easing, have created a backdrop that is undeniably favorable for Bitcoin. The big question now is whether these reasons will continue to push the cryptocurrency higher. In a memo to Crypto Potato, analysts from Bitfinex seemed optimistic. Unless ETF inflows collapse or macro takes a sharp turn, the structure remains intact. Bitcoin has flipped 111,000 to 114,000 into support, and as long as that holds, the trend is higher. For traders, the message is simple: respect the flows. Nevertheless, they warned that no rally goes up in a straight line. The analyst added that Bitcoin could be due for a correction first, as they have already started to see some signs of temporary exhaustion. Nansen Sondergaard also weighed in on whether Bitcoin has the strength to keep marching forward. Bitcoin recently broke through key liquidation levels and managed to hold above them, which I believe signaled there was more room for upside. On the technical side, Bitcoin's daily RSI has climbed above 70, which is typical in strong momentum phases. It's not inherently bearish. RSI rising during price rallies is normal. However, if price continues to rise while RSI starts to diverge or decline, that could be an early signal of fading momentum and the potential for a correction. And we just keep buying and stacking and staying humble, and we don't trade. Okay, moving on. This is from bitcoinnews.com. This was posted on July 12th. IBIT hits 80 billion AUM milestone, now holds over 700,000 Bitcoin. BlackRock's iShares Bitcoin Trust has reached a new high, becoming the largest spot Bitcoin exchange traded fund in the US in just 18 months since its launch in January 2024. IBIT has accumulated over 700,000 Bitcoin, now worth over $80 billion, dollars, and accounts for more than 55% of all Bitcoin held by US spot ETFs. The numbers are mind-boggling. On July 3rd, IBIT held 698,919 Bitcoin. Just days later, a net inflow of over 1,500 Bitcoin took it past 700,000. By July 10th, it was 706,000 Bitcoin, according to BlackRock's website. Nate Gerasi, president of Nova Diaz Wealth Management, stated on X that it's ridiculous that the fund attracted this much in such a short time. IBIT's growth has not only made it the largest Bitcoin ETF by AUM, but also one of BlackRock's top performing funds. According to Bloomberg ETF analyst Eric Balchunas, it's now the third highest revenue generating ETF in BlackRock's 1,197 fund lineup and just 9 billion away from being number one. As of early July, US spot Bitcoin ETFs hold around 1.25 million BTC, about 6% of the total 21 million supply. IBIT's share of 56% is more than double its closest competitors. Fidelity's FBTC has over 200,000 Bitcoin, and Grayscale's GBTC has declined to around 184,000 Bitcoin after previously holding over 600,000. BlackRock's dominance isn't limited to size, it also leads in trading volume. IBIT regularly accounts for around 80% of daily volume among Bitcoin ETFs. On July 10th, its trading volume stood at 5 billion, double its average volume. IBIT's success shows how attractive Bitcoin has become among institutional investors. Asset managers, corporations, and high net worth individuals have been steadily getting into Bitcoin as the asset gains legitimacy through ETFs. Balchunas calls the volume spikes big boy flows, meaning large institutional money is at play here. These flows are happening as the broader digital asset market is rallying, with Bitcoin skyrocketing past 118,000 and just shy of the $120,000 target. Inflows into US spot Bitcoin ETFs have reached over $75 billion since 2024, excluding GBTC outflows, and BlackRock's IBIT accounts for over 53.4 billion of that. On July 10th, net inflows into spot ETFs were 1.175 billion, and BlackRock was at the top again. BlackRock's Bitcoin fund isn't just growing fast, it's more profitable than some of BlackRock's biggest traditional funds. While BlackRock's S&P 500 ETF has 624 billion in AUM, IBIT has now generated 187.2 million in annual fees, beating IVV's 187.1 million. Bitcoin is also starting to rival gold as a safe haven asset, while the SPDR Gold Shares ETF is the largest gold ETF with over 100 billion in AUM. It took GLD 15 years to hit this milestone. IBIT did it in under 2 years. Several macro factors are driving Bitcoin's growth. Interest rate cuts, geopolitical stability, and regulatory clarity following the SEC's approval of spot Bitcoin ETFs are a few to name. Analysts expect more growth with projections of 200 billion in total Bitcoin ETF AUM by the end of 2025. Moving on to Bitcoin Magazine. This was posted on July 12th. 5 free metrics every Bitcoin investor needs. Bitcoin investing can be as straightforward or as complex as you choose, yet by utilizing a few free and powerful metrics, investors can gain a considerable edge over the average market participant. These tools, available for free, simplify on-chain analysis and help strip away emotional decision making. The realized cap hodl waves metric is one of the more nuanced tools on the on-chain toolbox. It analyzes the realized price, the average cost basis for all Bitcoin held on the network, and breaks it down by bands. A significant set of age bands is coins held for 3 months or less. When this segment dominates the realized cap, it indicates a flood of new capital entering the market, typically driven by retail FOMO. Historical peaks in these younger holdings, often shown in warm colors on the chart, and there's a chart here in the article, so check it out, links in the show notes, have coincided with major market tops like those in late 2017 and 2021. Conversely, when the influence of short-term holders diminishes to a low, it generally aligns with bear market bottoms. These are periods when few new buyers are entering, sentiment is bleak, and prices are deeply discounted. This metric can visually reinforce contrarian strategies, buying when others are fearful and selling when greed dominates. The Puel multiple helps gauge the sentiment of miners by comparing their current daily revenue in US dollars in block rewards and fees against a 1 year average. High values indicate miners are extremely profitable, while low values suggest distress, potentially signaling undervaluation. During previous cycles, lows in the Puel multiple have been excellent opportunities for accumulation, as they coincide with the times when even miners with high costs and operational risks are struggling to remain profitable. This acts as an economic floor and a high confidence entry signal. The MVRV Z score is perhaps the most widely recognized metric in the on chain arsenal. It standardizes the ratio between market value, current price multiplied by the circulating supply, and realized value, average cost basis, or realized price, normalizing it across Bitcoin's volatile history. This Z score identifies extreme market conditions, offering clear signals for tops and bottoms. Historically, a Z score above 7 indicates euphoric market conditions ripe for a local top. A z-score below zero often aligns with the most attractive accumulation periods. Like any metric, it shouldn't be used in isolation. This metric is extremely effective when paired with some of the others discussed in this analysis for confluence. Bitcoin funding rates reveal the sentiment of leveraged futures traders. Positive funding rates mean longs are paying shorts, suggesting a bullish bias. Extremely high funding often coincides with euphoria and precedes corrections. Negative funding, conversely, shows fear and can precede sharp rallies. Coin-denominated funding rates offer a purer signal than USD pairs, as traders are risking their BTC directly. Spikes in either direction often signal contrarian opportunities, with high rates warning of overheating and low or negative rates hinting at bottoms. The spent output profit ratio, or SOPR, tracks whether coins moved on chain were in profit or loss at the time of transaction. A reading above zero means the average coin moved was sold in profit. Below zero suggests realized losses. Sharp downward spikes indicate capitulation, investors locking in losses. These often mark fear-driven sell-offs and major buying opportunities. Sustained SOPR readings above zero can indicate uptrends, but excessive profit-taking may signal overheated markets. By layering these metrics, realized cap hodl waves, Puel multiple, MVRV z-score, funding rates, and SOPR, investors gain a multidimensional view of Bitcoin market conditions. No single indicator offers all the answers, but confluence across several increases the probability of success. Whether you're accumulating in a bear market or distributing near a potential top, these free tools can help you remove emotion, follow the data, and dramatically improve your edge in the Bitcoin market. That is, if you're a trader. If you're a hodler, you just buy, 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 buy. Buy more when the price goes down. A little bit more FUD from BitcoinNews.com. This is from July 10th. Democrat senators want El Salvador sanctioned, BTC tracked. A group of U.S. Senate Democrats is pushing for new sanctions against El Salvador's President Nayib Bukele, citing human rights abuses, corruption, and the country's aggressive Bitcoin push. The bill, called the El Salvador Accountability Act of 2025, would investigate how the Central American nation is using Bitcoin and if they're using it to dodge international sanctions or commit fraud. Now, why would a country like the United States, so powerful and large, care about what El Salvador is doing? I mean, just think about that for a minute. The bill was introduced in June by Democratic Senators Chris Van Hollen and Tim Kaine and Alex Padilla from California, the communist state of California. If passed, it would require the U.S. Secretary of State and the Treasury Department to submit a report within 90 days on El Salvador's digital currency use. The bill asks the U.S. government to clarify how much public money has the Bukele administration spent buying Bitcoin, which exchanges were used for these transactions, what are the government's digital wallet addresses, who has access to these wallets and the funds inside, is Bitcoin being used to circumvent international sanctions, and are there signs of corruption or misuse of digital assets? The bill also proposes sanctions, including asset freezes, visa bans, and financial transaction restrictions for Bukele and other top Salvadoran officials if they're found guilty of human rights abuses or other violations. El Salvador made headlines in 2021 when it became the first country in the world to adopt Bitcoin as legal tender. Bitcoin's government has since doubled down on its commitment to the scarce digital asset. The country even announced a plan to buy one Bitcoin every day until the asset becomes unaffordable with fiat currency. As of now, El Salvador holds over 6,232 Bitcoin, worth more than $678 million dollars at current prices, making it one of the largest national holders of Bitcoin. President Bukele didn't stay silent after the bill's introduction. In a sharp response on social media, he mocked the Democrats, calling them just salty. In another public comment, Bukele laughed off the accusations and dismissed the entire bill as politically motivated. The proposed sanctions have sparked debate. Both in the US and in El Salvador, supporters of Bukele's administration say that US lawmakers are just jealous or trying to interfere in El Salvador's sovereignty. In contrast, Senate Democrats insist their focus is on protecting democracy and ensuring accountability. Hmm. Hmm. President Bukele may think he has a friend in President Trump, said Senator Tim Kaine, but he should know that Americans will not tolerate his efforts to undermine the rule of law and democratic institutions. So much for being a sovereign country. Senator Van Hollen also criticized Bukele's close ties to previous U.S. administrations, accusing him of working with them to deport gang suspects into El Salvador's high security prisons, a move that some say bypassed U.S. legal protections. If passed, the El Salvador Accountability Act would be one of the strongest actions taken by the U.S. against a foreign government's Bitcoin policy. But the bill has hurdles ahead. Experts say it's unlikely to pass without bipartisan support, and some Republican lawmakers are supportive of Bitcoin and skeptical of government overreach. And yes, we hope that will just die. Next up, Decrypt. Five of the weirdest Bitcoin, Dogecoin, and Ethereum treasury pivots. Even though this talks about shitcoins, I thought it would be kind of funny to hear what companies are getting into the treasury game. A growing number of publicly traded companies are stockpiling digital assets in their corporate treasuries, a sign of growing interest in crypto as prices soar. But as more firms imitate software firm strategies' token hodling playbook, things have become weird. Several publicly traded companies with unorthodox operating businesses are beginning to add Bitcoin and other virtual currencies to their balance sheets. Noodle giants, love hotel operators, and telemedicine cannabis prescribers are among the mix. What's inspired them to embrace Bitcoin and other cryptocurrencies? Some may be hopeful that they can turn to tokens to rescue their struggling businesses, while others may simply be intent on capturing recent tailwinds. And they're dutifully stacking Satoshis and other assets, even as experts warn that adding crypto to a balance sheet won't necessarily salvage a poorly run company. Most new treasury companies are gimmicks and will likely fail, Andrew Bailey, senior fellow at the Bitcoin Policy Institute, told Decrypt in June. A badly run business doesn't become a good one just because it's acquiring sound money. Whether or not they're on stable footing as a business, these five crypto pivots certainly turned our heads. Here are five of the most curious and unexpected crypto treasury firms we've seen pop up to date. DDC Enterprise. Asian inspired food giant DDC Enterprise is among the latest firms to embrace the crypto craze. Earlier this month, DDC announced it had closed a massive $528 million raise with the aim of using the proceeds to build out its Bitcoin treasury. The Hong Kong based firm owns several convenience food lines, including Thai American food brand Yai's Thai and an Asian inspired noodles and soups line called Nona Lim. It also owns Day Day Cook, a platform for sharing recipes. The company held 368 Bitcoin as of early July, according to one of its recent statements. Those holdings were recently worth $43.4 million dollars based on current CoinGecko price data. And the firm has really embraced the pivot. While DDC presumably stood for Day Day Cook, previously the company now has decentralized digital capital on its LinkedIn page and elsewhere. Now that's a surprising pivot from food brands. Dogecoin Cash Inc. has amassed millions of dollars worth of Dogecoin Cash, a knockoff meme coin inspired by Elon Musk's favorite cryptocurrency. And while that might make sense, given the firm's name, the pivot that got it there was certainly interesting. Formerly called Sativia, the Canadian company still operates a business selling high potency cannabis products. In fact, it holds the first patented cannabis strain, Ecuadorian sativa or CTA, as well as a patent for a cannabis lozenge for individuals with hypertension, according to one of its public statements. It also operates a telemedicine business called Presto Doctor, which appears primarily focused on medicinal cannabis. This summer, the firm signaled it will also maintain a Dogecoin treasury, the real Dogecoin, aka DOGE, through a wholly owned subsidiary, a sign of its doubling down on its strategy inspired playbook. The company held 2 billion 20 million Dogecoin cash as of June 13th. The public statement from the company shows its holdings of the token were worth were recently worth $3.5 million. The firm's acquisition target for Dogecoin remains unclear as of publication time. Metaplanet, often billed the strategy of Japan, maintained an unusual non-Bitcoin related business long before it began holding the asset. Founded in 1999, Metaplanet has managed budget hotels, including love hotels, across Japan. A so-called love hotel is a type of motel that offers pay-per-hour rooms and other short-stay accommodations for individuals, couples, and groups that are looking for private places for personal encounters, no judgments. Metaplanet has become one of the most ardent acolytes of the strategy model, now holding 15,555 Bitcoin worth $1.84 billion based on current prices, according to data from bitcointreasuries.net. Canada-based Solar Bank is a renewable energy developer, engineer, builder, and asset operator. But while it champions clean energy, it's also committed to adding a notoriously dirty asset to its Bitcoin balance sheet, Bitcoin. But BTC critics have raised concerns about its extreme energy consumption, though to be fair, defenders say that renewable energy is making up a sizable and growing portion of its backing. Solar Bank announced in June that it plans to buy Bitcoin using the tokens to establish a Bitcoin treasury. However, the firm has not yet disclosed how many tokens it plans to snap up. Gambling marketing firm SharpLink Gaming is taking a gamble of its own, betting big on a popular cryptocurrency. The Minneapolis based company announced in May that it had acquired more than $400 million worth of Ethereum, making it the largest holder of the token among publicly traded firms. As of this writing, the firm now holds about $644 million worth of ETH after recent purchases, including 30 million purchased directly from the Ethereum Foundation. Founded in 2019, SharpLink uses technology to match sports betting companies with fans. It uses AI-powered tools to collect and analyze gamblers' online behaviors, directing them to relevant betting content and hopefully converting them into paying customers. Ethereum hasn't been as popular a treasury bet as Bitcoin, and certainly hasn't seen the kinds of recent gains that BTC has put up, making this a potentially risky pivot. However, we've seen more companies follow SharpLink's lead, and ETH recently topped $3,000 for the first time in 5 months, so maybe they're onto something. All right. Uh, this is kind of a new feature. Just a recap of some Bitcoin podcasts from the last week, very high level, but if you're interested, you can certainly check it out. Let's see. First up, Rabbit Hole Recap number 365, Open Water Bitcoin Returns. This one was from July 11th. They talked about a non-moving 80K Bitcoin, sparking discussions on privacy and large wallet tracking. New Samurai Wallet indictment frames anonymity tools as legal risk, and Russia launches national Bitcoin mining registry enforcing mining compliance and seizure threats. Then we also have Rabbit Hole Recap 364, Big Beautiful Bitcoin. That was on July 4th. The Big Beautiful Bill reportedly passed, prompting debate on legal implications. Robinhood tokens and Spark SDK's Wallet of Satoshi beta highlight layer 2 and self-custody experimentation. And EU encryption roadmap, Argentina high school Bitcoin curriculum, and privacy tool updates featured. A lot coming out of TFTC recently. Uh, Episode 638, Q1 2025 monetary base update with Matthew Mazinkus. That was on July 12th. Explores how Bitcoin's network growth follows a power law trend, predicts renewed money printing, reinforcing Bitcoin's value proposition, and discusses geopolitical tensions and philosophical implications of monetary expansion. Episode 638, from industrial debt to digital abundance with Jordy Visser, analyzes AI's disruption of economic indicators, argues Bitcoin is the future S&P 500 and transformative to productivity, highlights energy constraints in AI and crypto infrastructure growth. That was on July 9th. That was a good episode, actually. Listen to that one. Insuring Bitcoin, this is 636. Insuring Bitcoin against wrench attacks with Becca Rubenfeld, that was on July 7th, covers inheritance planning and insurance solutions for cold storage, highlights rising threats, kidnappings, and wrench attacks, and argues Bitcoin insurance is becoming critical infrastructure for institutional adoption. And then episode 635, Bitcoin's New Paradigm with James Check, that was on July 2nd, discusses institutional demand and sustainability via ETFs and corporate treasuries, evaluates market dynamics and structural support for Bitcoin. A couple other episodes. This is from This Week in Bitcoin, episode 63. Grift drains Bitcoin gains. That was July 9th. Warns about affinity scams and regulation backed banking products that divert funds from Bitcoin. And rebrands Bitcoin as a Geiger counter for global macro signals. And finally, episode 62, Bitcoin is the Geiger counter. June 25th, content reference. Bitcoin reflects geopolitical and macro shocks and discusses core development, cancel culture, and projected 9 trillion money printing by 2028. And that wraps up the Bitcoin podcast overview. Next, wanted to highlight this week's featured post on the Bitcoin Fortress Substack. Article is entitled California Wants Your Dominant Bitcoin, Your Dormant Bitcoin, I should say, unless you hold your own keys. So check that out, especially if you live in California. Looking ahead at the Bitcoin Fortress Substack, we've got lots of good stuff coming up. First or next up, crypto qualified mortgages, followed by the global Bitcoin boom of 2025. Tartaria, Lost Empire or Misunderstood History. Then creative destruction meets Bitcoin, and finally the convergence of Bitcoin and AI, unleashing human flourishing. So make sure you subscribe to the Substack and you will, it's free. But if you want to support me, that's cool too. Uh, and there's 3 articles a week, Monday, Wednesday, Friday. So there. Did want to mention the book. I have sent out a couple posts, and there's a link in the show notes to the book on Amazon. I just came out with the audio book on Amazon on Audible. So, and I narrated it myself. So check it out. It's good for beginners. Did want to send a shout out on Fountain for some support. 115 sats from at user 194044474. Thank you, sir. And with that, I will thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack at bitcoinfortress.substack.com. I'm also on Nostr. I'm on not on any other socials, just Nostr, and my pub is in the show notes. So check that out. And with that, I will talk to y'all next week. Bye bye.